What is actual a levy?
A levy is a situation, just in plain English, when the IRS takes your money from your employer or from your bank account.
So when they send the, as you said, the intent to levy, that means we're letting you know that we're considering or getting ready to attach your wages for some type of debt we feel you owe us.
Absolutely. And it's different from a lien. A lien is public notice that you owe them money. A lien is more of a passive collection vehicle. What happens with a lien is when one receives money. Let's say, for example, some IRS files a lien against you. And that lien is for $15,000, but you're not working and you have no money in your bank account, so you're not really worrying about a job levy or a bank levy. But let's say you're lucky enough to win lotto. They will deduct that $15,000 when they pay you that lotto amount. Or a scenario where someone owns property and they refinance their property or they sell it.
Right.
The IRS will be paid because a lien has been filed in court and it should be on your credit report. So there's a difference between a lien and a levy. The levy is more active. They will go to the bank and take what you have. They will go to your employer and say, listen, this guy's a deadbeat taxpayer. Send me his paycheck. So there is a difference.
Okay, I see. It's good that you explain that in common law terms.
Yes.
So now you're dealing with what you're talking about is the levy.
Exactly.
And you fast forwarded, and now they've gone and you didn't fill that form out properly.
That's right.
Okay.
So then you can also, the last option is to file this form 911.
Okay.
Now if that doesn't work for you, then what you need to do at that point is to bring your account current. So if they levied you, you hadn't filed the form 12153, you don't qualify for this hardship, then what do? What you do is this. Figure out what tax returns need to be prepared. Make sure that they're prepared and make sure you're paying the least amount of tax legally possible. No shenanigans with the example I gave earlier with the $40,000 deductions with the $50,000 income.
Okay.
So just make sure everything's prepared properly. And then you also give them your financial information. You tell them, listen, this is what I make. This is proof of what I make. These are my expenses. So I qualify for an agreement of, let's say, $200 a month, though I owe you $50,000. I don't have the assets. You can't get water from a stone, as people commonly say. The IRS would work with you in that scenario. So then you would be in an installment agreement for $200 a month. Now, the problem with the installment agreement is that the interest and penalty will still accrue. So even though you're in this agreement where the IRS is not going to bother you, as long as you make good on those $200 payments, the interest is still growing. So what we look to do with clients of ours is that we try to see if they qualify for this offering compromise program. And that's what's commonly called when you reduce your taxes, pennies on the dollar. It's very complicated, but it's possible. A lot of people, we work with a lot of people, and we've been very successful getting a lot of these compromises accepted. One person comes to note right in this area. A woman came in the office a couple of years ago and she owed $155,000
to the IRS.
$155,000, and we were able to negotiate a settlement for her for $7,000. So the bottom line is that it depends on your financial situation. Another person came in owed $50,000, we're only able to get them down to $20,000. Some people come in owe $100,000 and they don't qualify at all.
Right.
So it's about.
It really just depends.
It
depends. You have to take a hard look at their situation. You definitely want to seek at least some professional advice and some insight in terms of if you get some type of notice from the IRS.